Welcome back to the Alts Podcast. I'm your host, Horatio Ruiz. We bring you industry leaders and creators to give their insights on the rapidly changing and exciting world of alternative assets. Opinions expressed on this podcast by the host and podcast guests are for informational purposes only and should not be considered investment advice. Podcast hosts and guests may maintain positions in the offerings discussed in this podcast. Today's guest is Kenny Rose, founder and CEO of Franshares, which fractionalizes investments into a pool of franchises. Kenny is one of the top experts on franchises, if not the top guy. Because of his intimate knowledge of the industry, he is uniquely qualified to begin a platform like Franshares. Let's listen in. Kenny, thank you for being here with us today. This is your second time on the podcast. We're really excited. I know that you're on the verge of kind of launching the platform. You were with us back in May, so welcome back.
It's great to be back, and honestly loved all the feedback and support and waitlist times we got from that last time.
Yeah, definitely. And I would recommend to anybody listening here for the first time to Kenny that you go back. Stefan had Kenny on the podcast back in May 2021. And there's so much good stuff there as well. So this is like part 2, I would say.
Gosh, that feels like 10 years ago. I can't believe that wasn't even a year ago.
Doesn't it? Even I'm thinking how much has changed in the last 6 to 7 months.
Oh gosh, how much time do we have?
Yeah, right. So I'm sure, when you're doing a startup, every month is like, we call it NFT time, right? Anything can change from minute to minute, hour to hour.
That is true, but I do love what I do. So it goes by fast. It's just more of everything else in the world going on.
Yeah. So Kenny, you have some big things coming up with Franshares. For anybody maybe not familiar, could you tell us, kind of give us an overview of what Franshares is and, what you're trying to build?
Yeah, absolutely. So Franshares is unlocking an investment vehicle that hasn't been available to the average investor, which is the franchise industry. It's over 3.5% of the US GDP, but the average person can't get into it. You usually need 6 or 7 figures of cash. You need time to do it. You need the skill set to do it. So what Franshares is allowing you to invest in a portfolio, diversified franchises to earn income and equity for yourself. And you can invest for as little as $500 with no fees.
Yeah, if I can say it's a wholly unique investment platform. I don't know that there are too many other platforms doing that, right? Where you have the option to invest into a fund of franchises.
We are the first one.
And I will say, by the way, that you are the guy in terms of the franchise expert, right? You have been quoted extensively. You've had stories done on you on your expertise with franchises. So if there's somebody to start this up, it would only make sense that it's you.
Yeah, I appreciate that. And honestly, that's why I get the question a lot. It's like, why did no one else do this before? And honestly, it's like, if you're an outsider looking in, you'd probably go straight to thinking about fast food, which everyone listening probably started off that way too. But, fast food, the returns aren't great. Let's be honest. Like, they're very high upfront costs. They're paper thin margins, ton of employees. And so, like, if I was an outsider, I'd be like, oh man, that's tough. I'd get them 5, maybe 10% returns. That's not that great. And then, if you're someone in the franchise world, you're typically a couple decades older than me and aren't really paying attention to what's going on in the world right now. So it's just kind of a perfect storm. I had the right experience and everything came together really well.
Yeah. You were kind of a franchise broker before, right? And so you became really familiar with the business. What is it about franchising, right, that's unique to other businesses? Like that you would say that, beyond maybe the negative connotations that it might have, like how is it something that people may not be too aware of?
Yeah, well, honestly, anytime someone has negative connotations, I always ask them, like, tell me what you're thinking. Because frankly, most people never really received any form of education on franchising. They just have heard of it over the years. And so really there's all sorts of different franchises. Like most people just think of, I get the McDonald's secret sauce and the golden arches. But honestly, franchising covers over 100 different industries. And so there's plenty of them that you would never have known are franchises that you might use or that you've never heard of. And so it's really about having the systems in place. Anyone who started a business that's listening or wants to, they know that there are a ton of growing pains in trying to start the business, grow the business, and stabilize the business. And so those first 5 years can be absolutely tumultuous. And so franchising, you're really skipping those first 5 years. So maybe you're not something that's super consumer facing like a McDonald's. Honestly, you could be in the waste management industry, but they have the right systems in place to be able to find the right customers at the right price, provide the right service, and in turn get the owner the returns they're looking for.
maybe I'm being a little presumptuous here. Like from what you've seen and your expertise, if there's somebody, and this kind of a little bit aside, but if there's somebody who's interested in a franchise, has it almost become second nature to you to point out the ones that you really, really feel are set up to succeed for anybody that wants to launch a franchise?
No, honestly, everyone's different. They have different skill sets. They have different budgets. They have different goals. And so there's franchises that are owner operator, require very hands-on management by the owner. There's ones that can be more passively run. And also, especially there's ones that, require having a great sales skill set. And so ones like that you can get for honestly way cheaper than people think of. But it's just that's not what they traditionally know. And honestly, I'd have people who would come to me and say "Oh, I'd love to buy a McDonald's," and my first question would be why. And when you boil it down, it's usually they're looking for good returns and they've heard of that one. And so it's okay, well, we can find you good returns. McDonald's pretty much sold out everywhere, and frankly, we can find better ROI in other places. So it's really finding the right franchise for someone is definitely an art form in its own because everyone's a unique person. Honestly, my start in the franchise world was working in a franchise. It was actually a franchise brokerage that was a franchise. So they have franchises for absolutely everything. And if you'd asked me even a year before then if I would ever be in franchising, I'd be like, what the hell are you talking about? Because really, it's, I grew up in a town that didn't have franchises. So it was something I had no idea about. But when I was approached about it, I was coming off from being a financial advisor at Merrill Lynch. I'm the son of an entrepreneur. So they're like, hey, you're very entrepreneurial yourself. You're used to selling high ticket price investment products. All this really matches up what you're looking for, but here's the widget that you're selling. It's franchising. And I was like, you know what? That actually makes a lot of sense. Would I ever have expected to be in there? Not a chance. And same thing happened to me over the next 10 years is that people would come into me with one idea. And then I'd be like, well, what's your skill set? What are you trying to do? And honestly, you present them a couple options and you tell them ahead of time, hey, you're probably going to laugh at some of these, but don't knock it off until you speak with the franchisor first. And every time they come back wow, I did not expect that. That makes a ton of sense. This is a really cool business.
To that end, right? When you're selling the franchises and there's so many, could you give me an example of something that somebody wouldn't think of that's been franchised? You talked about a franchise of a franchise.
Yeah. Yeah. Oh gosh, I remember one of the funniest ones because you'd ask people what they're interested in and then why. And a lot of people are like, hey, I don't really care as long as it does X, Y, and Z. And so I had someone come to me who said, I want something that has a really great e-commerce side. And I'm like, do you care about the industry there? And he says, no. I'm like, I'm really going to test you on it. And I was sending him an email and I'm like, gosh, this guy's going to call me up and fire me right now. This is going to be insane. And I recommended Adam and Eve, the sex shop. So they franchised that and there are a bunch of stores. And so I'm not gonna lie, I was amazed when he absolutely loved it. He's like, oh, this is something that there's not a ton of competition in. They've got the brand name. There's the e-commerce side. It actually fits everything perfectly. And it just goes on and on. I've worked with everything from custom tailored suit franchises, waste management franchises, specialty dessert ones, window washing, residential cleaning. It just goes on and on and on.
Yeah. So, you're familiar with all of those. You make a case on your site, and you've been making a case for investing in franchises. And that's that, you need to kind of invest away from, the traditional assets, diversify away from Wall Street, diversify away from real estate, give those opportunities to retail investors where people can broaden their portfolio, right? And you feel like you're providing a platform for that.
Yeah, definitely. And honestly, it's not really just selling off all of your stuff and going into franchises. It's just about diversifying. When I was an advisor at Merrill Lynch, we would tell people hey, 20% of your portfolio should be in alternatives. It's not as correlated to the market. It increases returns. And honestly, when you look at that these days, most high net worth investors are closer to 50% in alternatives for those same reasons. So it's really a segment of your portfolio. I loved when people ask me so who are your competitors? I'm like, well, no one does this for franchising, so I have none. But they're like, oh, what about Fundrise or Masterworks? And I said, 20% of everyone's portfolio should be in alternatives. I'd be greedy to think I will get all of that. They are complementary investments next to me. The other thing, too, is that traditionally, these weren't available to the average investor. You typically had to be a high net worth accredited investor, accredited being at least $1 million in net worth or $250,000 income if you're single, $300,000 if you're married. But then what happened was in 2015, the Jobs Act really went into effect. And what this did is honestly inspired by Kickstarter, I believe, because people were launching all sorts of products on Kickstarter. They realized you could crowdfund money, but you couldn't do it for equity because you'd be breaching securities laws. So with the Jobs Act, they made it so a couple different ways where you could register your investment and then start working with non-accredited investors. And so that's what we did is we did what's called a Regulation A+. And that allows us to advertise the investment as well as work with non-accredited investors. And there's no cap on how many investors we can have. And so that's really why I wanted to go this route is I want it available for everyone. It's never been available for accredited or unaccredited. And so I think everyone should invest together. I had a lot of people say, why don't you just go after the ultra high net worth ones? I'm like, honestly, everyone needs access to this. And I think, you're continuing the same problem if you don't open it up for everyone.
Your fund is gonna launch in a couple months, and we'll get into that in a little bit. But I get the sense from listening to you and different things that you've said, it's important to kind of have this open to a lot of different people. There are no barriers. You do say, that the entry is $500, right? I don't want to speak for everybody, but it's a manageable investment, right?
Yeah. And honestly, like when you sign up on our wait list, we have a survey kind of understanding more of who's coming to us, like where do you live? And also, hey, what do you think about investing in this? And our average intended investment level is actually over $20,000 per person.
Wow.
And so you get everything from your 18 to 24-year-olds wanting to do $500 to a couple grand, all the way to your 55 plus that want to do 100,000, 200,000. We've had a bunch of 500,000 ones. And we're also talking with a bunch of family offices that are really interested in this because this is the type of stuff they invest in. And, they're looking for things that produce income. They're very niche and just something that other people don't generally have access to. And really, it's a very finite amount of who we're able to let into this first fund.
Yeah, definitely. So far, you've had a wait list, right? So you're going to kind of go through that wait list when the platform opens and offer up, offer what you have, right?
Exactly. Once we do open up, we'll be giving everyone the full offering details, what franchises are in the fund, where they're at, what our targeted returns are, how the process works. People can actually move up the wait list. Everyone who refers, you actually get to move up the wait list. And then also anyone who actually ends up funding an account that you referred, we give $50 for everyone.
You also seem to have a social equity kind of mission behind it, right? To where you think about a franchise, you think about a job in a franchise, which is kind of ho hum, no real room for climbing up the ladder, the corporate ladder, but you kind of want to change that.
Yeah, it's honestly interesting how it all started. We had the protests a couple of years ago after George Floyd's death, and Juneteenth really got big recognition. And honestly, I'd never heard of it before, like most people. And my great friend Carlton, who we always talk social issues with each other. He's a guy who grew up in Philly and real rough everything, but then he ended up getting a full ride to Penn State, and he's absolutely crushing it in life. So we love to have these conversations. And so I called him on Juneteenth and I said, hey, Carlton, I posted the black square on Instagram, but I'm not really the guy that just starts spewing hate or my thoughts and feelings on, little quote posts. But what can I do that actually makes a difference? I'm a hands-on guy. And he said, invest $100 in a black-owned bank. And I was just like, man, that's a great idea. That's actual change. And so we kind of started spitballing and kept rolling with it. And eventually it was like, well, hey, we've got this whole generation of people who are trying to become business owners and, actually leave generational wealth. So why can't we apply that to franchising? And so I kind of merged it with another part, which is ChickfilA, actually. Do you know how much a ChickfilA costs by chance?
I cheated just because I've heard you talk about it before.
Oh, you did.
But I know that to start something up like that is in the millions, right?
Yeah, it'd usually be like a million and a half. But ChickfilA actually finances it for you. And so it's only $10,000 to be a franchisee.
Yeah, that's amazing.
And, they have a lower acceptance rate than Harvard does now because of how many people try and become owners of their locations. And the reason they do it is they realize hey, people who run these the best started from the ground up. And so we'd like to, reward those people and give them the ability to own the locations. And so we want to take the same approach and start bringing this to all other parts of franchising because frankly, there's enough room to give investors a good return and start providing a good income to people who, start at a minimum wage job, and normally that would be the end of it. But we're creating the ladder where we want people to start here, see that there's management, then see that there's ownership, and then you've got an entire portfolio, and then there's Franshares corporate. So I definitely want to make some changes around here.
That's great, man. Let's talk about the franchises that you're kind of sourcing for your portfolio, right? For your fund.
Mm-hmm.
My main question is, how resilient have these businesses been through the pandemic? And I know that you last spoke in May, and we seem to kind of be in the clear. Everyone's like, the worst is behind us, and then Omicron comes and whatever, and it's like another shutdown. It's crazy. People are kind of at their wits' end. How has your fund, if at all, has it changed from the companies? How resilient have these small businesses been?
I literally never changed the companies that we were going into because of it. And the reason for that is that, I can't get into too much detail because we're still going through registration, but we have a food brand in there that's involved. And the food brand, it's a quick service restaurant, not fast food. But they had, I believe it was 19% same store sales growth over that major shutdown period, as well as since 2020, they've had, I think it's 41% same store sales growth since then. And the reason for that is the founder is actually a multi-time founder in franchising, and he grew a couple different brands to 300 locations each, I think, and then sold them. And the guy's always looking forward. And so as people were scrambling to how to reach people on other avenues, they were already prepared. They already had the app. They had loyalty programs. They had pickup and delivery. So they were already set up for all this. And it's also in a unique niche in that there's only a couple competitors in this food segment. And so they were really just poised for the opportunity there. And then the other one's in waste management, which I feel like kind of speaks for itself. Doesn't matter how many people are out wherever, they're still crushing garbage. And also there's like a whole bunch of distribution, working with like Amazon centers. There's things like, especially like new residential home builds or any construction. People were still building during all of that. Construction people were, if anything, it was easier for them because they have to shut down traffic in places. But most places were still building. So honestly, it was great to see that. That was my initial thought for the fund, and then to see it all play out how they did is amazing, and I wouldn't look back on it.
Everything you described, made sense especially during a pandemic, right? People were staying at home, even if it was just like home improvements, right? Changing a bathroom or changing a basement or making an addition because people were staying at home a lot more.
Oh yeah, there's so many home service ones that absolutely did incredible during that. Even things you wouldn't think of too, like insulation. You're like, who's doing insulation? But the fact is, reduces your utility costs, especially when everyone's at home and you're air conditioning the place more. And it reduces outside noise for when you're on Zooms all day. So it's just all these things that people don't think about. But, there's niches in the riches, as they say. So, these are the things that we focus on is like, hey, it's obscure, but it's got a systematic business model and they're profitable.
Yeah. So let's kind of dive into the fund, because there's a lot to talk about there. How have you set up Franshares? So someone's listening to you and they're like, man, Kenny, I'm in and I want to invest. And they get on the site and then, the platforms are, what's going to be available to them as an investment vehicle?
Well, first off, thank you for your support, guys, for thinking that. When you go there right now, you have to join the waitlist first, like we were talking about before, because we're still going through our SEC approval right now. And so once we do get that approval, we're actually going to have the platform where you're able to create an account, log in. If you ever use something like a Fundrise or a Masterworks or a Vint or a Here, it's all honestly the same process where you're able to really connect your bank account with Plaid or roll over from any type of retirement fund and be able to fund an account. But you also get like a full description of everything within the portfolio. So how many locations we're doing, what brands we're doing them in, where they're located, who the management team is. So you get really a full dive in all the details for the investment before you ever make the investment. We don't do blind pools and hope and luck around here. It's a lot of planning.
Would you say that that's going to be all one fund? Like, are there going to be options to invest in, like based on geography, based on risk tolerance maybe? Or is it going to be one fund to begin?
So for the first fund, we're doing one diversified fund for everyone. So it's diversified across regions by industry, pretty much every way you can diversify. And so, we want to do that because this is people's first foray into franchise investing. And so, like all investing, it's smart to diversify. And also what speaks to one person might not speak to another. So a lot of people are coming in expecting fast food. And sure, they're going to like the food option that we have, but some people don't want food. And so we want to be able to diversify it across those different areas.
How many franchises would you say you're going to have inside that fund?
I'm not sure I'm allowed to say that SEC stuff. I err to the side of caution when it comes to the SEC.
100%. I know that's you hear founders talk about that, and it's just like, once that ends, I can go back to, I can sleep again.
Boy, I can't wait.
So, speaking of the fund, and there's something unique about it, right? Because you're not charging any fees to the investors, and that's a big thing. I'll kind of let you talk about why you're not taking any fees, but then on the other end, like how investors can kind of maybe expect to see some of that money, their return on investment.
Yeah. So when it comes to the fees, before I got started, I checked out all the different players in this fractional alternative investing space. And I looked first to what do they hate the most? And the number one thing by a mile was fees. And so I thought to myself, like, I'm creating a new asset class. I want it to be something that it's a no-brainer for everyone. So it was kind of started to work backwards and how can we make money in other ways? And so what we do is that when you look at franchise finance, 80% of the cost is from signing the franchise agreement to opening the doors. And that last 20% is working capital. So what we do is we crowdfund the 80% to get the doors open, and then Franshares contributes that last 20% in working capital. So instead of just diluting you with a management carry, we're actually co-investing with you into the fund. And so that way we get 20% of the future returns as well as 20% of the future fund sale price when that happens. The third way that we make money is actually something that comes from my background in the brokerage industry, because we make the long-term money with everyone else there, but also we have bills to pay here. And so how franchise brokerage works is that, let's use an example like Supercuts. If you went straight to Supercuts and didn't talk to a broker like I was, it'd be the exact same investment level. Brokers are paid by the franchise themselves. And honestly, like it varies, but it's pretty much, they're very almost like pretty similar franchise fee costs as well as commissions for it. And so what Franshares does is acts as the broker. Franshares is the broker and the fund is the franchisee. And so basically we get a couple percentage points back to Franshares to actually launch the fund. And doesn't come out of our investors' pockets at all. And a big part of that too was we're the first to do this. I know there's going to be knockoffs, but you've got that first to market advantage. You've got myself, I've made myself a expert in the field over the last decade. And then finally, if you can't undercut the fees, it becomes a lot harder to come into the market.
Yeah, it almost seems like you've developed some partnerships there, and that you can't really duplicate, right? I mean, that takes time to cultivate.
Yeah, we've got relationships with over 600 different franchise brands.
Taking a step back, right? You talk about people replicating your business model. How long has this been in the works for?
Well, that's a multi-answer thing. So I had the idea originally 6 years ago. I heard a fundraise. They'd done their Series A, and immediately was like, oh, I'm going to do this for franchising. And, before I went straight to go out and asking money for people for it, I want to add to my credibility. So I went out and started my own brokerage and had a big emphasis in, being a thought leader in the space. So I was the number one writer in Quora on franchising, got featured in Forbes, ABC, Business Insider. But honestly, I got a little complacent. I built a good company. I was enjoying it. And then quarantine happened. And in quarantine, I read an article that people were gambling on the stock market because sports weren't on. And that was kind of my kick in the head moment of like, okay, I got to get this going yesterday. And so, right after then, that was probably May last year. And, May the year before. And then started fundraising for it February last year. And then about to launch the doors next month.
Yeah, it seems like the pandemic really, for all the bad things that have happened, really sparked, this general creativity, right? And like you said, maybe if you were in that complacency, you're comfortable, but then the pandemic just seemed to spark something in a lot of other people, to kind of get them moving, and some of them, change their lives, whatever that is for them.
Yeah, it definitely did.
So on your end, that's how you described this, how Franshares is going to take in money. How can an investor expect to see their return?
It's a combination of both equity appreciation and cash flow, passive income. So when you start a franchise, the value of the company builds over time as the sales increase. So you've got that as a natural way to earn money over time through that equity portion. But also we pay out from the actual proceeds of the franchise themselves. So we're going to wait about 12 months before we start paying out dividends because we don't want to take money from the franchises like right when they're starting, obviously. But then after that first year, we're expecting to pay monthly dividends to all the investors. So you get that cash flow portion as well as the equity appreciation.
Awesome. I know you had mentioned before, the ability to be able to at some point invest in local companies, right? Companies that are in your community.
Yeah.
Yeah, which is would be like a driver for somebody to support the business that they're invested into.
Yeah, we're definitely going to be doing more and more locally based portfolios. So, I'm based in Chicago. We'll have a Chicago portfolio. So where I go to actually get my hair cut, get my oil changed, go work out are also places that I co-own. And so, there's the benefit of investing locally, benefit of creating jobs down the street. And on the other side, it's actually great for the portfolios too, because I'm going to go somewhere that I partially own. I'm going to go to that gym. And so you've got this built-in customer base already, as well as built-in evangelists. Like anytime someone says, oh, my mechanic messed up, I got to go find a new one, I'm going to send him to the Meineke. Why that Meineke? Well, I'm a co-owner in it. And you're going to see a lot higher production from these franchises than you typically do within their systems.
Yeah, that's awesome. Because a lot of times, I like you said, you grew up somewhere where, you didn't have any franchises. And I imagine you're saying that everybody in the community, that every business was like, community owned.
Yep.
And with franchises, maybe, you don't have that personal touch, right? But you don't really know who it is that's behind the business, right? I don't know if that's a right way of putting it, that the franchises seem a little more impersonal, but you're trying to make it so that it becomes more personal.
Yeah, impersonal is a good way to phrase it, because frankly, they are all local business owners. They are employing local people. Other people tend to just see oh, you're part of a franchise, so you're not a local business. No, I took the business model from a successful business and brought it here. And so it's really everything you're looking for, except for your own unique name on the roof. Other than that, it's a lot of the same things the local businesses are doing.
For sure. I want to talk about how has this SEC process been for you? Because I know that there's a lot of people are just waiting for you guys to launch.
Yeah. Yeah. I don't want to say I get hate mail, but I get want mail. When is this coming out? It's been an interesting process, obviously, because this is our first foray into it, but also because nothing's existed like this before. They kind of said oh, this can't really be a blank check thing, because we said we're going to do a couple different franchises and maybe some of these other brands. And they're no, get specific. Where are you doing them? Which brands? Don't keep it open-ended. So we had to learn things, but also luckily there's been people who've been down this road in other new asset classes. So they're more used to seeing new things now. And what's also great for what we're doing is that most people don't know that franchising is actually regulated by the Federal Trade Commission. And so part of that, they have to disclose everything about themselves, like who the management team is there litigation against the franchise, what locations cost, what locations earn. And so what's fortunate is that we're able to then use these numbers that are regulated by the FTC when working with the SEC. And so I've had all the regulation a person should have in a lifetime, but I'm just getting warmed up.
When I think of the SEC, that in the fractional space, it's like the big, it's like going to go see the Wizard of Oz, and and it's I can't talk too much about it. And you're just kind of waiting and waiting and waiting for that approval.
Yeah. They're just so busy, constantly now. There's so many other things going on. So it's trying to make sure you get their attention constantly as well as a fun balancing act.
I know you mentioned before about some restaurants. Can you talk about any specific companies in the portfolio?
I can't just yet until we get that approval. I'm not messing with the SEC. If you're listening, I'm doing my part.
I guess going on with that, you're pretty much set, right? You're not admitting any more franchise. I know you talked before about how you kind of source the franchises. You looked at owners, pre-existing owners that had experience with franchises. You looked at franchises that were thriving during the pandemic. Are you admitting any more? And even if you're not, and let's say you're expanding for the future, right? What is your sourcing process, and how do you gauge them to put into a portfolio? Because then at some point, right, you want to put in this expected ROI for the investors.
Yep.
And I'm sure you want to maximize that.
Yep. Honestly, there's been a laundry list of franchises I've loved for years. And if I had all the cash in the world, I would have bought them up years ago. So it's nice to finally bring some of that to fruition. But another part too is that people have actually been reaching out to us, major franchisors that you 100% know the names of. Honestly, we haven't even launched yet. So to have them reaching out already is just absolutely incredible for us. But when we're looking at franchises, there's a lot of different factors we have to consider, from the growth of the franchise itself, the growth in location productivity, who the franchisor is, what's their leadership team like. I mentioned before that franchises have to disclose a whole lot about themselves. One part that's optional is actually what we call an item 19, which is their earnings claim. And so it's optional because obviously if you just start franchising, you can't really make one. And then at the same time, it's important to make sure that people can have an understanding of what they're getting themselves into. So some franchises might state this in terms of like gross profit, net profit. Gyms sometimes do like average number of members. So we're trying to only work with ones that can show like what their net profits look like. And so that way we can show investors like, hey, here's where we're coming from. Here's where we're getting our numbers off. And we're trying to be as transparent as possible in how we do everything.
So you've turned down some opportunities, I'm sure, or some franchises.
Yeah, a ton of them have reached out. We have to state what we're doing with the funds when registering with the SEC, so we can't bring in new franchises into this fund. But we're going to be launching several more, well, a lot more in the future. So we'll be assembling a lot of different portfolios for people to get involved in. That's going to compose of very different franchisors too.
So I can't stress this enough, right? So you anticipate launching the platform by the end of February. So if there's somebody that wants to learn more about Franshares, fractionalizing an interest into franchises, and I hope I just described that somewhat accurately. What can they do to learn more? What can they do to maybe become an investor at this moment? And what should they be looking for in the coming days?
Yeah, absolutely. So like I said, joining the waitlist is the first step. And we also have a white paper that we get sent to you right away when you sign up on the waitlist. So read through it. I know it sounds crazy to say, but you'd be amazed how people don't read through it. Another thing, too, is go through our blog. I know most people don't like blogs, but honestly, we're putting a lot of great content out there that's going to help people learn about franchising, learn how Franshares works, and once we're approved, to learn about the fund, too. And even like we're not sure how long I can keep doing this, but we're actually letting people do one-on-ones with me for 15 minutes when people do sign up. It's an optional thing. So we're trying to get an idea of like what people like about us, how they're finding us, and everything like that. So it's really, again, like doing this in the name of the investor. And so if you really want to do something, hop on the call with me. Let's chat.
Wow. Yeah, that is one of the best things. You feel like you're welcomed, right? As soon as you walk in the door, basically.
Yeah, I think I'm at like 200 calls so far. Eventually we might have to start doing webinars because I only have so much time. But honestly, the feedback we get from people and the stories we hear are just incredible.
What has that been like? What have you gotten in those 200 calls? Let's say something that has stuck out to you.
It's a great question. I'd say, well, first off, a ton of support. Like people, I can't tell you before, just like I've always thought about franchising in one capacity or another, but there was no way I could possibly do it. A lot of people are just doing their normal due diligence too, which honestly a lot of times could have been saved by reading the white paper. But I'd say one of the top questions that comes up is management of the franchises, which actually is a great thing to touch on too, because obviously how you manage the locations is crucial to its success. And so most people don't know this, but just like how there are property management companies in real estate, there are also franchise management companies in franchising. And so we are working with very experienced teams, in fact, ones that have direct experience with the franchises that we are starting with. And, they don't really advertise everywhere because, frankly, they've got enough work on their hands. But again, been in the industry, so I've known a whole lot of them for a long time. And it's also great to have these people that can take lessons they've learned from other franchise brands as well and bring it to you. And so we're making sure that we have really expert level management for each location there. And plus, we tend to look at more what we call semi-absentee franchises. So like a supercuts that are normally manager run. So we're bringing expert level management to ones that are typically run by people who are already working full time. And so we do that because we want to absolutely blow the normal returns out of the water and bring in a lot of professionalism to it.
I would have never thought that's like the business behind the business, right? That's incredible. Could you give us an idea of how big franchising is in the United States?
Yeah, so there are over 4,000 different franchise brands in 100 plus industries. Accounts for over $750 billion in the U.S. GDP, so it's over 3.5%. There's nearly 1 million franchised locations in the U.S. And I'm trying to think if I forget any facts and figures, but there's your taste.
That says enough. I guess to close out, because you're kind of, you're tying your experience and your expertise into this industry, right? What's going to happen to the franchise industry, right? Do you see that it's leaning more toward more independent businesses, or do you see that franchising has become even more popular?
Oh, I think we're about to see a growth in franchising, or absolute explosion, because honestly, a lot of what we're doing is that I've said for years, franchising is the biggest industry with the biggest marketing problem. Because I call it the F word of business ownership. They hear that word and they shudder, like, oh no, I can't be stuck behind a counter. But again, they typically have had little to no education on franchising and don't know that much about it. So, for instance, one thing we'll be doing a lot in the future is helping people with that transition from corporate to private. And so what I mean by that is that there's a franchise for everyone out there. And so what we want to do is help people by matching them up with the right ones, similar to what I've done in the brokerage industry in the past, but also by providing them with loans that are maybe easier to obtain than working with the SBA, because by then we'll have a huge crowd of investors, but we only offer equity investments. So we want to make sure we can start offering a debt investment too. And so once franchising becomes more and more popular, people are going to start seeing it as hey, I don't have to do the corporate grind 9 to 5. I can go get my own business and run it myself and be self-employed, replace that 6-figure income. So, I think what we've seen in the startup world and all of that excitement, people are kind of starting to realize that a lot of the ideas are already done. They honestly just throwing stuff against the wall, hoping something will stick. But for a lot of people, it's, hey, I need predictability. I want to be my own boss. I want to have control over my schedule. And all these things that franchising matches for, they just didn't have. They had a negative connotation with the name. And, obviously because of the ability to invest in it now, I think we're going to, again, see like a massive explosion in the franchise industry.
So Kenny, this is big because I'm sorry I didn't ask this before. You're starting up a fund, but then you also have the second part of Franshares where you're giving out loans. And it seems to me like you're also kind of giving some consulting advice for future franchisees.
I mean, that's all down the road. But yeah, there's a lot of different avenues Franshares is going to be going into, but I can't give out all my secrets just yet.
Okay. It seems like, you got so much going on, and I know you're a month away from launching. So we're all excited for you and really excited for that as well, for the opportunity to just invest in it and see how you guys are growing.
Awesome. I'm excited for it too.
How can people get in touch with you? I know you got the franshares.com. Is there any other social media that you're on?
Add me on LinkedIn. Well, I'm on all the social media. It's Kenny Rose, spelled like the flower. But honestly, I love connecting with people on LinkedIn, especially. I post on there more than anywhere. And also love to be able to introduce people wherever I can when it's mutually beneficial for everyone.
Yeah. And maybe then you could also just, read the white paper,
Yeah. Read the white paper first.
Awesome. Kenny, thanks for spending time with us today. It was great again to catch up and to kind of see where you guys are and we'll see where you guys go. A month or two from now, it's go time.
Thanks so much. It was great being on here again.
Have a great day, Kenny.
You too.
Kenny is gearing up to launch the platform, with Franshares about a month away from getting final SEC approval. When that happens, investors will have the opportunity to diversify into a wholly unique asset class led by someone who has literally written a book on the industry. We at Alt are happy for Kenny and eager to see his platform get the green light. If you enjoyed today's podcast, let others know about it. We find our guests so interesting and knowledgeable, and I know others will too. Or leave a review or hit the follow button.